Very good morning, friends. I'm Nalnakshi Swami. Welcoming back to my channel, Smart Index Edge. Since 5 days, I was not able to make the video as I was on Gujarat tour. Today, I want to show you something, tell you something. Everybody has got a question why market is falling. That is the main question every trader asks himself. When the market falls, the first question every trader asks is why is the market falling? Some say it is because of war. Some say it is because of global uncertainty. Some say foreign investors are selling. But the truth is, market rarely fall because of single news event. Very often, the technical structure becomes weak first, and the news only becomes the trigger. Here on the NIFTY chart, it has attempted on September 2024 the same level, around 26,200. Market hit the same level thrice before now on 8th December 2025 and then 5th January 2026. But that structure had become weak. That is the reason for that. The previous big fall, if we go back to the September 2224, here you can see September on 23rd September 2024, that was NIFTY had made a strong top after a long rally. You can see it was a long rally. It was a strong top. Now, ask yourself an important question. From that point until March 2025, this was the 2025. Actually, the index corrected almost 4,500 points. You ask your question for yourself, was there one big disaster at that time? No. What actually happened was something very common in markets. The market had already run too far too fast. Valuations were stretched, momentum was slowing, and institutions had already started booking profits quietly. Once the structure becomes weak, any trigger can start the fall. Any trigger. So some technical trigger started the fall. And here, the role of war news today, again, many people are saying the fall is because of geopolitical tension between Iran and Israel. Yes, such tensions do create fear in the market. Whenever conflict happens in the Middle East, the first reaction is usually seen in crude oil prices. Oil prices rise. Higher oil means higher inflation, and higher inflation creates fear about interest rates and economic growth. Because of this uncertainty, investors often move money toward safer assets like gold. But here is the important point every trader must understand. War usually creates volatility, but rarely starts a major bear market by itself. For example, when the Russia-Ukraine war started in 2022, the markets fell sharply for some time, but later they recovered and continued their trend. This tells us something very important. News may ignite the fire, but the fuel was already there. Here, the fuel was already there because Nifty had topped too much and the volume had increased, but price was not increasing. That was the clear indication of distribution was happening on the Nifty long before itself. Before most corrections, the chart quietly gives warnings. You will usually see signs like these. The market tries to make new highs but fails repeatedly. That's what you can see over here. It tried to make a high, new highs, and it failed repeatedly. That is the indication you momentum was losing. Momentum indicator starts showing divergences. Volumes increase near the top, but prices do not move much higher. This is known as distribution, where large institutions slowly sell their positions to the market. Retail traders often enter with excitement during this phase, thinking the rally will continue. Many people might have entering this phase rally, but already distributions had started very quietly over here, and the Israel-Iran war is the trigger for this deep fall in the market. When the distribution phase finishes, even a small trigger can cause a sharp fall. Liquidity, the invisible force, another powerful force behind the market movement is liquidity. When global investors feel uncertain, they move funds towards safer and larger markets. When the shift happens, emerging markets like India, temporary outflows will be seen. That selling pressure can push indices lower even if the domestic economy remains strong. Now, our economy has not not become very weak or anything. You could have seen the GDP recordings and everything. Even in spite of that, market starts falling. It is simply because global money is rotating elsewhere. Market cycles repeat. Remember this. If we observe the historical pattern of Nifty, correction of 12 to 18% are actually very normal. Correction of 12 to 18% are actually very normal. Markets move in cycles. First comes a strong trend, then comes excess optimism. After that comes correction, and then eventually new trend begins again. Many traders panic during the correction phase, but experienced traders understand the corrections are a natural and necessary part of the market cycle. The most important lesson, the biggest lesson here is this: do not depend only on news to understand the market. News explains what has already happened, but the chart often reveals what is about to happen. If the structure is strong, bad news may only create a temporary dip. If you see the structure of the Nifty is strong, it has rallied and it is a pause. It is a pause, it has come deep down. You can see 4,500 points from September 2024 to March 2025. the history is repeating here. So it is a range. Actually, if I put a line over here, just a line over here, it is in this range. Market Nifty is trading in this range. Within this range, when the indices corrects, many stocks will give you a very good discounted price and very good fundamentally strong companies you can look for, invest for. Or otherwise, you can invest in the indices. I mean, Nifty ETF itself, you can put money into the gradually. So if you see the structure over here, if I put two lines over here, see, you can see the top and the range low. The market has tested the low once, second, and now it is heading towards this low for the third time. We need to see if the market, it is the structure from here, the structure of the market from 19,000, it is a strong rally. So it is a pause. That's why time-wise correction is happening. It is the second time market is correcting so deeply. So if you start observing the market, so you will find a very good investment opportunity, or to buy some stocks at very, very discounted, very cheap price, you can go for that. So, this is why traders who understand price action stay calm during volatile times. They observe structures, levels, and behavior rather than reacting emotionally to headlines. Final thought I can say you when the market falls, just remember this. Remembers this, the war may have been the spark, but the market already prepared the ground for the fall. And those who understand market structure can see these changes much before the headlines appear. So, friends, actually, this is what I am seeing the broader picture. You can see the trend is intact in Nifty. This is a correction. If you see the history, it is a deep correction of 4,500 points. Similar correction is happening on the Nifty, and war is a trigger, news trigger. And if I take this one temporarily for the fifth tool, let me put it, if I put this, it has broken this structure, the target comes to 1.618. Level of the Fibonacci tool comes to 22,000. You can see over here 22,991, and there it corresponds to a gap over here, and this gap maybe this is the liquidity present over here. The market may come down to this level. Do not panic. It is a range low. You can see the range low at 21,772. Sometimes market may not come to the range low. It may come to 22,991 to 22,663. Stay calm. Do not do anything. If you are an investor, wait for the opportunity, wait for the levels, and invest in the few fundamentally good strongs which are available at discounted price. Thank you very much, friends. Nalinakshi Swami signing off.